Okay.
Yeah, go ahead,
So,
Krishna.
yeah, I wanted to introduce Amarnath, my good friend. I've been known for the last 40 years and I've been his client for 30 years. So, and Purnima, Gopal, and Darshini are part of Amarnath's team. And since there's a lot of interest in the group about India investment, I requested Amarnath and his team to, speak about how they manage overseas clients. And so, me being one of the clients as well, and hopefully this session will give us more insights. Okay. So with that, I turn it over to Purnima, Amarnath, all of you.
Yeah, you can start sharing the screen.
Yeah.
Oh, you're already sharing it. Okay, sorry. You're already sharing it, but you are sharing the video. Okay. Yeah, you can put it on slideshow. Okay, perfect.
Yeah. Thank you, Krishna, for the introduction, and Nari for introducing us to your group. See, I've been in the stock market for a fairly long time in India. So we've been. I started work in '87 and I became a partner of a company in '90. So it's been all my life I've been in the stock markets in India. And we've gone through a lot in India over the last 30 odd years. As we all know, it all started gaining momentum after the liberalization in 1990. So I've fairly been through the whole the whole journey of the stock market as far as India is concerned. Although, of course, India has a very old history of investments in the capital markets. The Bombay Stock Exchange was started in 1875. It's 150 years old today, and the oldest stock exchange in Asia. So India is pretty well, aware of the capital markets and has been in the capital market for very, very long time. But the momentum started picking up only from the early 90s when new regulations were formed. We formed the SEBI, the Securities Exchange Board of India was created. A new exchange, the National Stock Exchange, was created, which was an all-India platform, technology-based. So there has been a lot of momentum from those days. When I started my career in stockbroking, the Bombay Stock Exchange index was at 800, and today it is at 70,000. So it has several 100x returns have come from the markets in India. So Indian markets have been doing extremely well. Even if you take the recent years, even this year, for instance, apart from the US market, which again has been booming over the last few years after COVID, India has also given comparative returns. So, and I think India is a great market for overseas investors to invest in India. There is very, very serious interest in India from many of the FIIs. FIIs have been putting in a lot of money into India. What are the reasons why people are investing in India? We all know that India is the most populated country in the world. So demographics play a big role in in the development and growth of the country. And India has a very large population, has a very large middle class people, and therefore there's a huge consumption in India. It is also the fifth largest economy in the world and the third largest by purchasing power parity. India's GDP is expected to grow at over 6% per annum for the next several years. And we will be the third largest economy in the world by 2027, overtaking Japan and Germany. But our per capita GDP is less than $2,500 per annum. So we have a long way to go as far as removal of poverty and so on. But therefore, there will be far more growth provided the capital is comes into the country. See, there's a very interesting report by Morgan Stanley last year. I don't know whether some of you could go over it. Morgan Stanley seems to be extremely bullish about India. It says that India in the next few years is going to really take off as an investment destination, mainly driven by demographics, by digitalization, by decarbonization, and by deglobalization, which are all favoring the new India, which we have today. They estimate that about a fifth of global growth till the end of this decade will be driven by this new India. And this will be led by offshoring. India's exports are expected to triple in the next 10 years to $500 billion. We all know that the digitalization and the online payment system in India has dramatically changed over the last few years. All of us, use digital money and transactions are
Akbar, can you unmute yourself? Sorry.
Yeah, can you hear me?
Yeah, sorry. Okay.
Yeah. Another big development is that a lot of focus has been given to for energy, basically. Yes, India has always been a power deficit country, but of late, a lot of investments have gone into power, and consumption of power is likely to increase by 60% by the end of this decade. And 2/3 of this will come from renewable sources. So that is another big thing. Like, for instance, where India is very big now in wind power and solar energy and so on. And, the big plans for green hydrogen and other such things. So this will very positively impact India's global trade. And, it will lower fertilizer subsidies. It will create a new demand for electric vehicles, cold storage chains, green hydrogen, trucks and buses, etc. So a lot of things are happening in India. Of course, it's the home for 140 billionaires. It's which is the third highest in the world. Indian women, as we all know, has huge gold holdings. Indian women hold 21,000 tons of gold. And our households earning $35,000 a year is likely to rise to 25 million families, basically, with over $35,000 a year over the next few years. So what this means is that the GDP is likely to cross $7.5 trillion by 2031, which is more than double the current level. And the market cap for India is expected to triple to $10 trillion in the coming decade. So these are all very positive things for India. And the FIAs have also started investing very heavily into India, especially now, in fact, over the last 2 weeks after the state elections in 4 states were declared. It is perceived that there will be a very stable political scenario in the country over the next few years, which gives a lot of confidence for foreign investors to invest into India. We also know that China is slowing down, and there is very little FDI going into China today. And FII investments also are slowing down tremendously in China. And every large brokerage and foreign FII is looking more keenly into investing into India. So everything looks good at the moment. Geopolitically, also, we seem to be in a sweet spot. We have very good relationship with the US. We also have good relationship with Russia, and thereby getting cheap oil. So these are all very, very positive, very, very positive for investments into India. The other thing is, I'm sure many of in your group are from here, from India, so you all know India very well. And you must have many of you would have studied India well. You know the politics, you understand, you know the people, you understand the culture, you follow cricket very closely. So, apart from your home market, which is in the US, I think this is really for any diversification, I think India is really the place for you to be. This is apart from many people here have assets in India which they are managing in some way. But we really don't see NRIs bringing in money from abroad to invest in India. They're managing the assets here, but not really bringing in money. I think that trend should pick up in a big way in the next few years. The processes have become much simpler. You can, you can bring in money at any time, take it out at any time. There has been a lot of ease in operations as of today. So I think this is a great opportunity now for investments into the country. So this is the brief introduction which I thought I would give. Is there any questions or anything? And then probably we can move into Purnima and Darshini can probably run through the slides on specifically on NRI investments in India.
Yeah, guys, any questions? So I had one question. So what is the current price to market cap ratio in India? Whether it is out of whack or is it in line?
See, it is about 22 is the P basically for the Nifty. So the EPS for the Nifty 50 shares is around 987, I think it is.
Okay.
So the P ratio is around 22. I think comparatively in the US it is close to 25 if I'm not mistaken.
Okay, very good. Yeah, I think these are all a lot of good positive things about India. I think I asked for a slide on limitations or risks also. I think you are going to cover that later on, so we can proceed.
Sure. Yeah. So Darshini will do the next one.
So hi all. Can you hear me? Is everything okay?
Yes, yeah, we can hear you.
Yeah, hello everybody. Lovely to start my morning with all of you. So we heard what are the things that makes investing in India attractive. So now automatically the next question is, what are the avenues through which we can invest in India? Right? What are the options available where we can deploy the funds? So basically, NRIs have a plethora of investment options in India, ranging from equities, mutual funds to fixed deposits. While there are some challenges like restricted stock lists and operational hurdles, but the growth potential of India's market, it remains very attractive. So with the right strategies, NRIs can actually harness these opportunities to build a diversified and promising investment portfolio. So definitely, yes, the current economic environment makes immense sense for NRI investments in India. So the first, we all know the basic the avenues: equity, mutual funds, FDIs, bonds, ETFs, and real estate. So just a one-liner about all these avenues and how to invest. What are the procedures that follows will be in the upcoming slides. So equity. NRIs, we all know NRIs can invest in Indian stocks through the PIS scheme. The route, which will be elaborated in upcoming section. I don't want to confuse now. So the Indian stock market with its dynamic nature, it offers the potential for significant capital appreciation.
So
And
are
the next,
we going to the next slide, or is it the same slide?
no, the detailed thing will be done later. This is just the one-liner.
Okay.
Like just a sentence, because
So
to those people who
we are
doesn't
still
know.
seeing the avenues for investments by NRIs, right? That is the slide.
Yeah, exactly. Yeah. So the mutual funds, they provide a diversified approach to investing in countries' diverse market segments. So if professionally managed, it makes them a very suitable option for NRIs seeking expertise. The next one, FDs. NRIs can open NRE and NRO accounts to park their funds. These accounts, they offer very competitive interest rates and the convenience of repatriation. So somewhere around 7 to 7.5%. And the next is Indian government securities and bonds. They are considered very secure investments. And definitely,
Yeah,
you
I
can
think
all
you are
benefit
cutting
from the...
out, Darshini, I think you are cutting out a bit. Yeah, there is some disturbance, right? I think
we lost.
Anything?
Yeah, we couldn't
wait,
hear
you
the
lost.
last two sentences. Yeah.
Okay. That is nothing. The bonds. I was talking about the bonds.
Yeah,
How secure
Amar,
they
can
are.
you cover Purnima?
Purnima, would you like to this thing? Darshini, I think you're breaking.
I can hear her clearly.
Okay. There's just
Can
a
we
couple
just
of
try
lines.
again?
Maybe you should.
Darshini,
Okay.
can you try?
Okay. Okay, continue. Maybe the problem is. Okay.
Fine now?
Yes.
Okay.
Yeah.
Maybe you can
So
turn off the video. Okay.
Okay. So the bonds, they are considered very secure, and we can all benefit from the regular interest payments and potential capital appreciation that is around 6.5 to 7% based on tenure. That is purely based on the tenure. And the real estate, it's an investment vehicle that allows individuals to invest in a diversified portfolio of income generating real estate assets. So these assets can be commercial properties like office buildings, retail spaces, residential properties, etc. So the next thing is ETF, exchange traded funds. Most of us would have an idea about it. That is, an ETF is very similar to a stock, also known as a basket of securities. So they help in investing the amount in diverse avenues, such as shares, bonds, even we have gold ETFs, silver ETFs, equity ETFs, others as well. So the next one thing I've left out in the slide is derivatives. So investing in derivatives is, it can be done, but following certain norms as prescribed under the FEMA Act. So these are the possible avenues which can be, these are potential avenues which can be looked up for investments by the NRIs. So the upcoming slides will cover the process, how to start over, and other brief things which will be carried on by Ms. Purnima. So and was everything clear?
You can take any questions, Darshini, if there's.
Yeah.
Can we move on?
One question. But I see the slide that says NRO funds. Is that specific to NRO, or NRE cannot be part of it? I mean, what's so specific about NRO funds as identified there?
So that actually refers to the bank account type. That is, we have to open an NRO account, and then we have to, the funds has to be passed on from those accounts, I believe.
Okay. And I'm not sure if the latest rule changed. Wasn't there a $1 million a year limit to repatriate under NRO account?
We will be covering that in the later slides.
Okay, all right. Just because I thought his NRE is limitless, NRO has a 1 million, but I'll wait for it. Thank you.
Maybe you can move to the next slide.
If we don't have any questions, then may I proceed?
Yeah, because I think whatever questions may probably come after the other slides on NRE, NRO, and all that, which you already have.
Okay.
So I think you can move ahead.
Hello, everyone, and very happy to be part of this presentation. Thank you for the opportunity. It's a very exciting time for us in India. The stock markets are booming, and this is a time when there is maximum interest from investors to invest, and this is a very opportune time to be talking to you. I'll be going through the operational and modalities of investing into India, and let me start with the textbook definition. The NRI is a person who is living outside the country for more than 182 days. It could be for work or business. And a person of Indian origin is a person who has at any point of time held an Indian passport, or his parents or grandparents have been Indians. And the by default, the spouse of a PIO is also deemed to be a PIO. So this is the basic definition of the NRI and PIO, which you would be aware of. Now we come to the most important aspect of the funding of investments into India, which is through two main demarcated accounts. The first one is the NRE account, and the other is the NRO account. Questions usually arise on the repatriation and taxes, but what is an NRE account? Very simply, if you transfer $50,000 from the US directly into a bank account, that receiving account is a designated NRE account. It's called the non-resident external. The NRO account is basically a rupee account, which actually takes in your Indian income. Suppose you have a property from which you're getting rent, or you have Indian investments which is giving you interest, or dividends from shares and so forth, which is from your Indian investments. That is what goes into an NRO account. So NRE and NRO account, a person can have both these accounts, and it is with a bank of your choice. As far as repatriation is concerned, NRE account is freely repatriable. The principal and the interest you can repatriate at any point of time. And as far as NRO account is concerned, a person can take out up to $1 million per financial year, which means the Indian method which we follow, April to March. And this can be done after submitting a very simple form called the Form 15 CACB, which your auditor would be issuing. Basically, it states that you have paid your Indian taxes. So this is a way a person who has brought in funds, or person who earns Indian income here, can repatriate. The next is the tax treatment. NRE interest is tax-free in India. So whereas the interest earned on NRO accounts are taxable. Other tax aspects come from other segments called capital gains, which we will be covering later. We'll move on to the Indian investments into direct equities by non-resident Indians and PIOs, because this is the most complicated of investments into India. The other aspect is investment into mutual fund, which is very simple. It can be done by investing through a distributor or a broker, and which is
I had a question on mutual funds, right? So I believe
yes.
there are some restrictions, right? So I have some mutual funds, and when I try to close it, they say that I have to be in India to close it. You know, are there any restrictions?
See, basically, earlier investments into mutual funds were taken by all the asset management companies, and later on there was these restrictions as far as declarations were concerned. Basically, it is a FATCA declaration which is very important. So if your FATCA is not completed, basically the FATCA is you given details of your KYC, which is your PAN and other details, bank details, etc. But additionally, you provide the declaration that you're paying taxes in another country. So probably this FATCA declaration is not complete and your KYC is not complete, and therefore they say that you're not able to uh, take out or close the investment. So anytime the KYC is incomplete, it gets frozen. It could be for many reasons, not updating PAN, it could be for no nomination, it could be for various reasons. So I think in your case, it could possibly be the FATCA that is not complied. That may be the reason. And it has happened in the case of very old investments where at that point of time, the FATCA was not compulsory. So on a case-to-case basis, we can assist in.
Yeah, but what about I opened these mutual funds through Axis Bank long time back,
Okay.
and now they don't allow new mutual funds through Axis, right? So there are I don't know what is happening with the mutual fund, and the one I think probably you're right. Maybe they did not complete the KYC. I thought I did KYC several times. That is one of the frustrating things about investing in India. They keep on asking for KYC even if you have done it.
See, actually, KYC is earlier used to be a one-time process, but now it is updated every few years. I think it happens in other countries as well. Basically, it is to capture details which have changed. For example, when you have started investing, your income slab would have been less than 5 lakhs, but as the time passes, your income slab increases. So the government wants to capture these information which has got changed. It could be even change in your bank, it could be change in your address, change in status, probably from resident you become non-resident. There are different changes that may have happened. So updation of KYC is now a regular process, and it's in the interest of the investor also, so that he is also aware of these are the things that are required. And
The
it is
other,
fairly simple. If guided properly, it could be fairly simple actually to complete the KYC.
Punya ma'am.
the other thing is that now with all this new digitalization, Aadhaar and all that, so they want to link the PAN and the Aadhaar basically. So this linking process is complicating it a bit now. I mean, I think this is a short-term blip kind of a thing. It will ease out over a period of time. I mean, shortly. It's not over years.
See, and they very well know that you are an NRI, and they very well know that technically you are not supposed to have Aadhaar. But they keep sending emails saying that you have not linked Aadhaar to your PAN, so I'm going to discontinue the validity of the PAN. And these are all the things which are irritating about investing in India.
No, absolutely, you're absolutely right. This Aadhaar linking has created many problems because on the one hand they say that you don't need an Aadhaar, on the other they insist on linking both. But basically, I think today even an NRI is allowed to apply for an Aadhaar. Earlier, they said that it is not correct to apply for an Aadhaar. But today, NRIs are also applying and getting Aadhaars and declaring that they are NRIs.
But I thought the rule is still you have to be there for 180 days to get Aadhaar.
Not really.
No,
let me just check this out. Because there's a lot of changes happening in this Aadhaar thing. So
I did not know that NRIs can apply for Aadhaar without staying for 180 days. I thought the rule was still that NRIs cannot have Aadhaar.
Sorry, I can update you there. Like I have an Aadhaar, I got it like few years ago. I didn't stay in India for 180 days. I'm still in NRI.
No. See but that is not correct, right? See whether it is correct or not. Anybody can do anything in India, right? We know that. But I don't think it was the rule. The rule is NRIs are not supposed to have Aadhaar.
Nari, from what I know, this is
actually when Aadhaar was
Nari, if it wasn't allowed, they wouldn't have, like it's a government issued ID, right? So it's not like it's a private organization giving an Aadhaar. So when they
Right.
gave it, they took all the documentation and it came from the government.
Yeah, but then you may have given an Indian address.
Yeah.
So they will not have any idea whether you are an NRI or an Indian resident.
That's right.
This is Sitaraman. So I'm speaking from my recent experience from 23, right? So other the 182 days rules is still present, and that is the correct rule.
Yeah.
Right. Now people can get Aadhaar by bribing, by going and doing all kinds of things. Right?
Exactly.
So if you go to a big city, I went to a big city, right? So big cities, folks know the 182 day rule. Right? If you go to a small village, you can bribe him 100 rupees and you will get an Aadhaar in like 3 hours. Right? So that's
Yeah,
what.
you don't even need to bribe. You just need to give your
I know.
Indian address and they
I
issue
know.
it.
I know, but
Yeah.
I know people that have gotten Aadhaar today in this year in 2023, right?
Right.
Just as a courtesy, they gave like 100 rupees bribe. But even without giving that 100 rupees, you can easily get an Aadhaar if you go to a remote corner of India and apply Aadhaar in some small village. They are not going to know the rules, right? So
That's
all different things are happening. But as far as I know, from my personal experience in 2023 June, I was not able to get an Aadhaar.
right. Yeah.
Right.
So let me just get some clarification on this Aadhaar, because this has been a problem for NRIs because on the one hand, the banks are instructed that Aadhaar and PAN need to be linked. But in cases of NRIs, it says that you don't need an Aadhaar. Then the banks are getting stuck in some way. Let me just get some clarity on this and come back.
Yeah, during the same time this year, June, my cousin was also with me. She applied in a different city, right? She got Aadhaar. I applied in a different city. I applied in a bigger city and I did not get Aadhaar, right? And then only I realized I should have simply, applied with my cousin in the same city, in the small city. I would have gotten an Aadhaar. Right. So I'm not going to stop. Next time when I go, I'm certainly going to apply for Aadhaar in some remote village, and I'm going to get my Aadhaar. Right. So you can have the 182 there. Now, on top of all of this, I know for a fact, folks from Bangladesh, Pakistan, Middle East countries, all of these guys have Aadhaar today.
Yes, they do.
Right. So that's a problem, right? So, see, I'm not asking for Aadhaar to go and rob RBI. I'm asking Aadhaar to prove my identity. Why are you issuing Aadhaar to Pakistanis and Bangladeshis and non-Indians and denying
No,
to NRIs?
Pakistanis, Bangladeshis probably not. But you're right. I mean, many people from the Middle East and
I have seen,
Indians.
right? I have seen Bangladeshis, working in Bangalore having an Aadhaar card.
Right.
Well,
But of course that's.
Anyway, we are digressing from the topic. Let's go back to topic.
Right, but going back to if the bank has specialization for NRI services, not a regular bank that also operates in foreign exchange, which every bank does that, but it's a branch that is specialized, which basically is going to say for NRI services, like Axis Bank would have it. They actually let you apply for KYC from here. Okay, so there's some gap here between. In other words, big banks won't just give you Aadhaar and PAN card and all of those that are needed to open the demat account. Okay, which is you basically need to be a tax-paying entity, which is what a PAN card number is, and
Yes.
all of that you can do it from here. And I'm thinking, I don't know 100% of it, but if there are NRI services specialized branches that let you operate from here. Okay, all I'm saying is this looks like the information probably is changing from place to place to place in local branches and banks and various places, but the banks that specialize have a branch with NRI services, they probably will tell you right away what is possible and what is not.
Well, yeah.
I just want to point that out.
Yeah, just like everything else in India, your mileage may vary, right? The same Axis Bank took me 3 attempts to open an NRO account, right? The bank is right in front of my home, right? So that fellow came to my home, inside my home. He verified my details 3 times, and I had to repeat the application 3 times.
Was that NRI specialized branch?
Yes, right.
Oh,
So
okay.
again, like I said, your mileage may vary. You'll be lucky if you go to a place where they know what they're talking about, but that's not true.
Right.
See,
No,
on this linkage, right, Amar, on the linking of Aadhaar and PAN,
yeah.
I also got that email, but
Mm.
then I think this is my view. I think banks by default send out that email, right, without really identifying it. But then when I spoke to my auditor, he said, "Oh, anyway, you're an NRI. This linkage doesn't have to be implemented." Because I think that is also linked to some electricity bill or some property
Yes,
tax or something, right?
correct. They are
Right.
linked to
So,
quite a few
correct.
things out here
Yes,
now.
correct.
So,
Correct.
so some of these
He said,
glitches are happening. But
yeah.
Purnima, do we have NRI clients today who do not have an Aadhaar but have, are investing in mutual funds or shares?
Yes, we do.
Ah, so
Basically, these mailers which come from different entities, it could be your bank, it could be your other service provider to link PAN and Aadhaar, they are just mails which are sent to everybody. It doesn't pick out and segregate and send it only to resident Indians. So therefore, we people keep getting that, and then they feel that it is addressed to them. So actually, these kind of mails, we just ask the clients to ignore that because it's sent to everybody. As an NRI, it is not required for you to link your PAN and Aadhaar at this point of time. And just to add about getting the Aadhaar, in the earlier times, whoever had an Indian address and who was present used to go and get an Aadhaar. They never knew that NRIs need not have an Aadhaar. So there was a lot of confusion when this Aadhaar concept was started way back. Now they say that NRIs at this point don't need an Aadhaar. So if a person has it, then they go ahead and link it. Otherwise, they just ignore that message.
no,
But
but
it
Yeah,
is possible to invest without having an Aadhaar card as of now, but the PAN is mandatory.
correct. Yeah. Yeah, very true, Purnima, because when Aadhaar was introduced, it was very easy to get. And that's when I got it 5 years, 7 years ago.
Also, to add about the NRI branches, there are designated branches where the people are more experienced in handling the operational aspects and also guiding on repatriation and taxes. So, a normal branch may not have people who are experienced in this line.
There are also banks in the US, right? For example, SBI has
Yes,
offices in New York,
that's
DC.
right. That's right. So, can we continue with investments into equity and the modalities for that?
Yeah, let us go through the slides.
Okay. So basically, to invest in Indian equities, that's the securities market, NRIs and PIOs are supposed to have what is called a PIS account. This is a portfolio investment scheme. It stands for that. It's got nothing to do with managing the funds, but it is the name given. An NRO and an NRE PIS can be opened, and the rule is that each person can have one NRO and one NRE PIS, but not more than that. So if a person wants to change his PIS account with the bank, there's a process for that. So it's this is basically a routing account. It has got nothing to do with funds. It is just a routing account which reports your transactions to the RBI.
So that
Apart
means
from,
I cannot have PIS account in two banks.
no, you can have it only in one bank.
Oh, okay. How do
So
they control that through the NSDL or something or like?
no, the bank itself reports directly. So
Uh-huh.
I'll be going through the transactions, so then it becomes very clear.
Okay,
Uh,
thanks. Okay, go ahead.
so apart from the PIS account, the investor should have the savings account. It could be NRO and NRE again, and he also requires a depository account or a demat account. Demat is mandatory because all securities are traded only in demat mode. And lastly, he needs a brokerage account with a broker. So once he has these four accounts, to recap, it's the PIS, the savings, the depository and the brokerage account. This could be as two segments. He can have both the NRE, which is repatriable, and the NRO, which is the ordinary account. Once he has these, uh, the PIS and the savings accounts are with the banker, whereas the depository and with a banker, and the depository account and the brokerage account can be with a broker. Now, moving on, the other information which is required is that like I said, the transactions are reported to the RBI, and this is done through the PIS, and it's a banker's responsibility to report the transactions to RBI. Now, speculative transactions, that is intraday, is not permitted. Derivatives are permitted, but on a restricted scale. The transaction process for buying and selling of shares is very simple. Now, the investor places an order with the broker. When a purchase is made, the broker has to send the original contract note to the banker, that is the person who hands the savings and the PIS account. The banker checks in, notes all these information, and then he releases the payment to the broker. Now, in case of a sale proceeds, what happens is when a share is sold, again the contract is sent to the bank. Now, here what the bank does is he matches along with the purchase and checks for any capital gain or loss. If there is a capital gain, then he deducts the capital gain completely, whatever extent it is taxable, he deducts that, and then credits the savings account of the investor with the remaining amount. Now, like the question which you had asked, in case a person has a PIS account with, let's say, Axis Bank, and for some reason he wants to change it to HDFC Bank, then he has to take an NOC from the existing bank, and he also needs to compile all the information pertaining to the shares which are already managed by the previous bank. So he has to take the date of purchase, cost of acquisition, and whether it was NRE, NRO, all that information he has to collate and hand it over to the new bank. Only then the old account can be closed and the transactions will transition to the new bank.
Okay.
So
you mentioned there are some restrictions on derivatives for NRIs. What are the restrictions for derivatives like options and so on?
basically, NRO accounts are allowed to do derivatives at this point.
Okay, but if a NRI has a NRO account, then they can do options, but they cannot do it in NRE account. That's what you're saying?
That's right.
Okay, that is fair enough. That is the only restriction?
Yes, and at this point of time, there could be additional. Mr. Amarnath, have you come across anything else?
So that is it, basically.
Okay.
At the moment, derivatives cannot be done on a repatriable account.
So you cannot do day trading. You cannot buy and sell the same securities on the same day.
Correct.
And you cannot use NRE account to do options trading, right? Those are the
That's
restrictions.
right. That's right.
And there is also additionally for the cash segment, there is a list of banned securities which RBI releases from time to time. These shares also cannot be bought.
Those are basically shares which where FII, I mean foreign holdings exceed a certain limit, say 75% in certain shares, 50% in some other shares. Okay. So, but those should not really affect.
Right. Yeah, that is unless it is a very small. Unless it is a very small company, it is not going to kick in.
That's right.
It could be.
Yeah, what about crypto? Like, are there any exchanges, including yours? You guys deal with crypto, or how do people do crypto in India?
Crypto, there are a couple of crypto exchanges in India, but I am not very sure about the liquidity in those exchanges, unlike your Coinbase or Binance.
Okay.
The liquidity is a bit of a problem in the Indian exchanges. There are a couple of Indian exchanges.
Okay.
But I wouldn't advise NRIs to really invest in the Indian market in cryptos.
Okay.
So we can move on to the important aspect, which is the tax. Now, like I mentioned, interest on NRE income is tax-free, but there are other headings which comes under capital gains, which could be from sale of shares, sale of mutual funds. In this, we have two categories: tax on equity and tax on debt. Now, equity taxation is same for all. Equity and debt taxation is basically same for all investors, whether resident or non-residents. Long-term capital gains on equity is for holding which exceeds 1 year, and there is a 10% capital gains tax which is payable after a threshold of 1 lakh, above a threshold of 1 lakh. So, in the case of non-residents, the bank will deduct the TDS and then uh, credit the net amount. In case of short-term capital gains, it is for securities held less than 1 year, and here the rate is 15%. So here again for non-residents, it is deducted and the net amount is transferred. Now, losses cannot be set off. It can be claimed at the end of the financial year when they are filing their income tax. Now, the other aspect is that dividend income is taxable. Dividend from securities will be added to your income, and then it is taxed at their respective slabs. But dividend is also, there is a 10% TDS on dividend income. Now, importantly, the KYC, which most people
Sorry,
say.
you mentioned more than 1 lakh. Is that 1 lakh per transaction? Let
No,
us
no,
say
for a
if I have
financial, it's for a
200
financial.
shares and sell it by piece, 50-50 to make sure it is less than 1 lakh, is it not capital gains is not included?
Basically, it is for the entire year, 1 lakh
Oh,
for
for
the
the
entire
year.
financial
Okay.
year. So if you have made 5 lakhs capital gain at the end of the financial year, you would be paying
Okay.
tax
Okay. So this
for.
is for the total. Okay. Okay.
That's right.
Thanks.
That's right. So
We have to
KYC, which is
we have to
actually
file
what is
taxes in
the pain
India.
point for many people, as they say, but it's actually quite simple. You need your details as far as your Indian and foreign address is concerned. The PAN card is of course mandatory. You need the PIO card wherever it's applicable. Then you would require the bank proof, which could be in the form of a check leaf from the bank account, statements, and so forth. So the accounts can be opened by completing the KYC booklets or formats. This is for the bank as well as for the broker. You open the bank account separately first and then submit the details to the broker, after which he will be able to open your brokerage and demat account. So it's basically a simple process. In many cases, as of now, the online is not available. It is the offline method, but it's a one-time process and it could be completed with pretty fast. I had already mentioned regarding taxation, but this is a slide which goes further into it. Non-resident Indians have to file their tax in India, and they also do it by July 31st. The slabs I have already mentioned. Since we are running out of time, I'd like to cover what is called the limitations or constraints, which is important for you to consider. Many of the non-resident Indians have certain reservations, and these are. I just did a short survey, and this is what I saw was the most important. One is the double taxation. So people are paying tax in India for their income, and they are again paying tax overseas in their country, so it becomes double taxation. But actually, India is signed up with about 88 countries for the DTAA, which is the Double Taxation Avoidance Agreement. So here you can claim benefits. You can either pay in only one country, that is your country of residence, or you can claim for relief. So it is not really a problem. You can overcome that. The other important constraint is that they feel that in India the procedures and the processes change very fast, compliance changes very fast, and keeping abreast of the latest developments is a pain point. But here, if you have somebody who guides you properly and helps you, then it could be surmounted. And most of these reforms and things have been for the better. It has been to simplify processes. So we have seen a lot of change and improvements that have happened. So we are quite okay with that, and we can guide people on that. The other is delay in processing. There are several background checks, physical signs required, and so forth. But this is actually again in investor interest, where they ask for physical forms to be signed and submitted. This is for their convenience, actually. Another important constraint they feel is that there is lack of professional advice, especially on taxation, how to save tax, and how to manage investments. This again, if you have a good chartered accountant and a financial advisor, you would be able to handle this. Other issues are related to real estate, actually, where they find it difficult to sell or buy property, and the process of registration. Here again, if you have anybody who's helping you with this person who can guide you, then it should not be much of a problem. If anyone has any other constraint, or if they have any problems, you could probably sound us out on that. We'd be uh, happy to give our suggestions. Are there any questions?
Is that the last slide?
We have more, but it's already those are very basic
No,
on.
no, you can let us go through all the slides.
I have one question.
Yeah.
Especially when we do the investment in real estate. In India, there is black and white. That is where it is a big issue for NRIs.
Okay.
See, but that has substantially come down actually now. Especially if you're talking of houses or apartments, this black-white thing is more or less gone. It's more in farmland and other things where there is a big black component. Things are getting better actually today. I mean, you really don't have that much of a black component as what it used to be earlier.
Just to add to that, we have many non-resident Indians who have sold property in India, insisting on a full white, and that has been complied with. So we have a lot of builders and developers who also have a full white policy. So it's not like Mr. Amarnath said, it could be only in the case of faraway places or farmlands where this issue can happen. But in the cities, it can be surmounted.
Okay, then. Thank you.
Welcome. Basically, sir, our other slides are on bank accounts and so forth. I'm not sure whether that would be of any much use. If there are any questions on investments, because we really have only about.
Let us just run through the slides. Just flash the slides and ask any people have any questions.
So these are the different kind of bank accounts. Yes, Steve.
On the mutual fund, isn't there restrictions for NRI? They can invest only in some.
Yes, they can invest.
Mutual funds.
There are many of the asset management companies do accept non-resident investments. They take it with an additional declaration that has to come from the investor, and this is a one-time declaration that has to be provided, where, like I mentioned, the FATCA details are captured. So once this declaration, most of the leading AMCs do accept non-resident investments, US, Canada.
But they insist on paper, right? Online you can't do.
I'm sorry?
You can't do online. You have to send papers by courier, and then they check all those things. You need to send it, and somebody has to process it there.
That's right. Because right now, even account opening, whereas it is possible for resident Indians online, for non-residents it's not possible because it takes in the IP address and disallows. That is the reason.
No, my question is if there are only restricted portfolios which an NRI can invest in the
No,
mutual fund,
it's
right?
not so.
Or
You
is it
can.
open? Or is it
It's
open
open.
to all?
Once an asset management company says they accept non-resident investments, any scheme of theirs you can put it in. There is no specific restriction on which scheme you cannot invest in. So it could be an equity mutual fund or a debt mutual fund or a hybrid fund. You can choose any of their schemes and invest. Suppose there is an AMC which says that they do not accept non-residents investments, you cannot invest in any of their schemes.
No, but
That's
apart from non-resident investments, see, U.S. citizens sometimes we come across where
Yeah.
their auditors advise them not to invest in certain mutual fund schemes because the taxation of mutual funds in the U.S. is different compared to how it works in India. I think when you invest in a mutual fund in the US, the capital gains is worked on the individual scripts held in the mutual fund. Is it, or how is that? Could somebody let us know?
Yeah, I think it is done. Capital gains are done like on an annual basis,
Right.
based on what stocks have been sold and other things.
That's right. So that is how it is calculated in the US, whereas in India it is only the NAV. So suppose you bought something for 10 rupees and sold for 20, the NAV of 20, then your capital gains is 10 rupees. Whereas in the US, I think when you invest in a mutual fund, the tax report calculates what are the capital gains within that fund, which if they had bought some shares, sold some shares, something. There's a
Yeah,
different.
no, that is a very good point. Yeah. So that
Yeah.
means it is maybe better to just invest in ETFs rather than mutual funds.
That's right.
But in India, I have invested in mutual funds where they have this so-called growth option.
Correct.
Where the dividends and other gains are not distributed to you, they reflect itself in the NAV. So in some ways, many of the mutual funds have this so-called growth option, which is somewhat like ETF. And that's what I have been doing. I've been investing in India for over 20 years. And I have used the growth option, and I almost use it like an ETF.
Right.
correct.
Right. But have you had any difficulties in your US tax filings?
I have not had any difficulties because of that. I just use it like an ETF. I have about 6 or 7 mutual funds on which I have put the growth option in there, mainly because the reporting is not been there with respect to the individual instruments that they buy and sell, like the way they do it in the US. And because of that problem, I just switched to the growth part of it, and I have been filing. And the US, my tax guys have not been questioning that. If they do, I will just have to, shrug my shoulders and say, hey, do whatever you have to do. But my feeling is that since India doesn't really have, maybe now they have ETFs, but those days they never really had any concept of ETF. So we used this growth option as the ETF. And many of these mutual funds, in fact, track a different NAV for the growth option compared to the regular NAV, which has got the dividend option.
That's right. Because the dividend is distributed, so the growth option would normally be, the price will be much higher than the dividend option.
Yeah. Hey, since I got the floor, I will ask you this question for the investment in India in general. One of the frustration I have had, even though the market has done very well in India over the last 20 years, the market in the US has also done very well over the last 20 years. But the only problem is the rupee value has been kind of deteriorating over the years. So in the beginning of the century, it was like in the 40s, Today
That's
it's
right.
83 rupees per dash.
Correct.
Is the government going to any time protect the rupee? Are they going to let it free fall just to promote exports?
No, I have a feeling that the rupee will you will not see this kind of depreciation of the rupee in the years ahead. I think while the rupee can depreciate, it will not depreciate for the last for 20, 30 years, it's been depreciating by about 5% every year. So your return has to be at least 5% more than your, say, the US returns for you to be on par.
Correct.
But
But that
going
has not been the case. You can say correct. I appreciate the correctness of your correct answer. But the reality is, it has not been holding up. Like, for example, if you take the last 10 years, in the last 10 years, the return on US equity is almost the same as Indian equity. Indian equity has been slightly better. But
That's right.
Indian rupee has fallen by 33% in the last 10 years.
Hmm.
So if you take off the 33% over the last 10 years, it's pathetic.
No, that's true. That's true. But then if you take your investments in, say, China over the last 10 years, your the return itself has been flat, and I don't know how much the yuan, whether it has appreciated or
But
depreciated.
I want to be honest with you. We are
Yeah.
talking with Indians in the US who are very
Yeah.
savvy. We are very
Right.
savvy
Yeah.
investors in the US.
That's right.
Our group, Nari, is a great leader of ours. And
Yeah.
he has put together a good group of people. We're all savvy investors.
Right.
And we know how to make money in the US stock market. And
Sure.
if you are going to attract us to invest in Indian stock market, and it has got to beat not only the return on investment but also the return on depreciation of the rupee.
Totally understand. Totally understand. The only thing is my personal thoughts. I'm sure you will be able to give me better inputs. See, what I feel is that the US market, the rally today, it is at an all-time high. But I think much of the rally is by this Magnificent Seven, right? It's not a broad-based rally, is what I think. I don't know whether you agree.
No, I don't agree, only because in the US stock market, the Magnificent Seven has been giving the big increases. But then if you look at the P ratio of companies outside of the Magnificent Seven, it's very reasonable. And if the
Right.
economy of the US were to stand, I mean, you can all predict the economy of the US is going to go down the tubes or whatever. But if you think economy of the US is not going to go down the tubes, and the other companies, the industrials and small caps and other things are going to do very well, the P of small caps and industrials in the US is even less than that of India.
True. No, that's because the growth. The people expect higher growth in India than in the US. I mean, which is why
They
the
may
PE
be
is
expecting
higher.
higher growth, but
Yeah.
as long as if you don't hold up the rupee, you have to. Modi has to come out and say, "I am going to keep the value of the rupee solid." He's not saying that.
No, but that.
So my question to you: what's the average that you're making, and what is this gentleman projects in the future that doing his portfolio management that he projects that the returns could be?
Dharmender, we can talk about the projection by anybody. Anybody can project anything.
Right. So that's
But
what.
if you look at the
answer
last
of
10
you.
years, if you look at
If
the
I may add,
yeah.
see, basically, if you look at the growth of the stock markets, we have a very simplistic calculation or an indication. It is growth GDP plus inflation. So if your GDP is about 7% and if the inflation is 4%, then you should get a 11% return. This is the indicated. Usually that is what that is a pattern that is followed. Am I right, Mr. Amarnath?
we are looking at a growth of 15-16%. I mean, I think any investor would like.
No, this is the minimum I'm saying. This is the indicated kind of a thing. In mid caps, you can get 15, even 18%. In large caps, also you can do 12%. But if it's difficult to predict, this could be the base kind of a return you could expect.
Right.
Yeah,
So, Bala,
true.
what
But
is your,
I think
what is
Mr.
your,
Bala's point was that while you are getting that return, your depreciating rupee is making it
Correct. I understand.
unattractive.
In our experience, the rupee has depreciated or crashed on only 2 occasions. Otherwise, it has been about 3 to 4% per year steadily. There has been times when I think in 2015 or something like that, when it shot up from 60 to 70 rupees a dollar. At those times, the government takes measures to step in and then stabilize the rupee. This has always happened. So what happens is, even if there is a knee-jerk reaction and there is a huge depreciation, it is stabilized at some point of time. So what one of the participants had mentioned is that 33% depreciation over a 10-year period could be eased out as about less than 4% per annum.
Bala, what is your experience in the returns that you
I don't look at it per annum basis. Per annum basis, you can come up with any level of justification. But I can tell you, when I used to have a company in Bangalore. When I sold the company in 1999, the rupee was like 40 rupees to a dollar. Today it is 83 rupees. So whatever rupees I got by selling the company has lost half its value, no matter what I do. Now, the stock market in which I invested it has gone up from that point onwards. So I have made money. But I am not saying I have not made money. But at the same time, if I had converted and put it into US dollars in the US, it was like 9,000 Dow Jones. Today it's 33, 35,000. It has also gone up 3.5 times. So the calculation you have to make in order to attract investors like NRI investors into India is kind of on a 10-year basis. If you look at 5 or 10 years, what is the expectation? When Modi took over in 2013, rupee was 63 rupees to a dollar. Today is 83, which means 1/3 of the value is gone. Now, what is going to happen in the next 5 years? Is there any prediction? Is there any commitment to support the rupee so that the rupee doesn't go down to 100? That is what the question is in my mind.
Rupee, so my feeling on this is that if the economy moves at the pace it is growing today, I mean, like we say, it is now they're expecting 7% growth versus the rest of the world, like say the US, if it grows at 3% or or 4%, in the next few years the rupee will stabilize very much and probably even appreciate. So in that sense, you may get a double benefit basically.
I agree. I don't see any reason why rupee cannot stabilize at this level or maybe even appreciate. But the government should be committed to that. Government should not, because when the rupee stabilizes or appreciates, export business will be hurt. And as soon as the export businesses are hurt, all of a sudden the money you need to buy oil or this or that will be required. Suddenly they will come up with some export friendly policies to dump the rupee down, and hopefully they won't do that. But that's what they have been doing for the last 20 years. They've been dumping the rupee. They've been dumping on the rupee to promote exports. They got to stop that.
No, I think, see, that has been a global phenomenon. I think it's not just India. See, the US dollar has remained extremely strong because it is the global currency. So if you compare any other currency against the US dollar, I mean, except say a Swiss franc or something, they've all been depreciating against the dollar. So it is a tough argument to ask a US investor to invest in any emerging market. Because the US market itself has
but you are talking to a US investor, right?
That's right. That's why I agree. But the thing is, the only thing I can say now is you get your get your processes in place And you be ready to take the opportunity, because one is that I feel that a certain diversification is required, because my personal view is that while the US market can come down significantly over the next couple of years, I don't see that happening in India.
I don't see that either. I agree with you. The one is, I think Indian economy is doing very well. I think Indian stock market will do very well. The only thing I'm not sure about is the rupee value.
Right. Yeah. So that I feel.
The
That I feel.
calculation that one time I had my advisors calculating, it's about works out to be 7% difference between investing in India, all things being equal, and investing in US. It accounts for the inflation that is different, 2 to 3% here to 8 to 9% there, depreciating the currency, and also taxation difference. Because when you file the US taxes, even though you get the credit for what you would have paid taxes in India, when you really have to pay US taxes on universal income. So even if there is a taxation that is less in India, as long-term capital gains versus short-term capital gains, you still have to pay the difference of that transaction here in US.
Yes.
So at the end of the day, all of those, if you normalize it, it's about 7% difference in the returns. So what I'm saying is, if you make 15% in India, it's like making 8% in US, all things being equal. I'm talking normalized over 5 years, 10 years, if you can just think of it like that. Now,
Yes.
If you have an emerging, if you, any small cap, mid cap, if you project you're going to make a 10% reasonable return in US, you really need to make 17 in India for it to be viable. Not to mention the pain of doing repatriation and this and that. If you need another 3% that you think you need to be paid for the pain, that's the difference in the calculation. Now, if some huge concentrated portfolio brings you more than 20%, now it's worth it. Maybe there is some portfolio that brings 29%, 33%. I don't know, but that is what my calculations yielded. I don't know how other people agree or disagree, but that's about where the difference between the two returns, India return versus US return, is.
Yeah, perfectly.
See, can I?
Yeah.
I do off late invest only in multi cap or flex cap. So that automatically at flex cap growth fund. So, and the average return for the last 5 or 10 years, if you see, it is in the order of 17 to 18%. And I have to pay taxes only when I sell it. So till then, there is no taxes which is similar to US. Only when I am investing in the stocks, I have to pay when I am trading. But in mutual fund, if I am investing for 5-10 years, I'm not going to pay taxes every year, only at the time of sale.
Correct. That's absolutely right.
Yeah, I agree. I mean, I agree with both Mr. Dharmender and Giridhar. See, what maybe a way to solve this is that, like Mr. Dharmender said, have a concentrated portfolio of maybe small caps or something. Because many of these companies have been, 10 baggers and 15 baggers over the last few years. So maybe it may not be a good idea to just put it into an index fund. You may need a more concentrated kind of a portfolio to get the better return. And also that as far as the taxation is concerned, it's only when you sell. So I think whatever you do in India, you shouldn't be trading too often. You should probably buy and hold for the long term. In which case, I am hopeful that there will be both capital appreciation as well as rupee appreciation. So you will get the double benefit going forward, is what I believe.
Yeah, I agree.
Yeah, the currency depreciation is also somewhat related to the local inflation, right? Because if there is high inflation, then the currency is going to depreciate. But now, of course, US had high inflation last year, but typically the US inflation has been much lower as well, right? So I don't know what are the inflation prospects in India, right? So unless the inflation stabilizes and comes down, then currency may not appreciate really.
So the inflation has not been much of a problem in India. See, the inflation has been, I think, 5-6%, 5% or so. But that is because the growth is also much higher, and our interest rates are also higher. I think interest rates and inflation also are very highly correlated. So our interest rates have always been 6 to 7%, and that is what inflation has been. In the US, I think the inflation went up sharply, and therefore your interest rates have also picked up uh, substantially. But I think going forward, both our inflation will be maintained and interest rates will also come down in India. And I also feel that the rupee will appreciate.
Yeah, I hope so. I hope rupee appreciates. I hope the policies. But I think there is another dimension to it, Nari, which I think is the government policies towards holding up the rupee value. Because I think what the government does is they come up with export-friendly policies quickly.
Right.
As soon as they see some kind of a weakness in exports,
Yeah.
and as soon as they come up with export-friendly policies, export-friendly policy basically means dump the rupee value
Correct.
down.
Yeah, I think TCS, Wipro, Infosys, they will go and complain, saying that
they will go and complain the rupee value is too high.
Appreciating.
Yeah, and so what's happening in India is right now they have a lot of dollars. They are actually having something, I don't know the number, but something in the order of $500 billion or something.
Yes,
like
it's
that.
more. I think it's closer to 600.
$600 billion worth of foreign exchange reserves that they got, and they are investing that money in US treasuries.
Oh, really? Okay.
And India is now starting to invest in US treasuries. When you are doing that kind of US treasury investment to prop up the dollar, why should India prop up the dollar? That is because they want to support TCS.
Oh.
Oh, that is one argument, but the thing is, why India needs to have US currency is because we import a lot of oil and other material. But right now, now we have direct dealings with both with Saudi Arabia as well as Russia to do rupee ruble trade or rupee real trade. So our dependence on the US dollar is also reducing, as is for China and for Russia. So I have a feeling that the dollar will depreciate over a longer period of time. I'm not saying within the next 2-3 years, but I feel in say 10 years, the dollar will definitely depreciate. I mean, it's a view. I mean, it's everybody differs.
Could you go over the services that you guys specialize in?
Yeah, sure. Purnima?
Hello?
Purnima?
Yeah.
What are the services we specialize in is a question.
Okay. Services we specialize in would be assisting in the investments into direct equity, mutual funds, bonds, and so forth. Additionally, we also help in compiling taxes for the Indian side as well as for the US and foreign taxes. So, if there is a particular process where you need to capture details from January to December as per your norms, we are able to provide that for taxation purpose. The other is advisory on repatriation and mainly coordination with the banks also for repatriation. So this is a big help. I think many of our clients say that they are happy that somebody is representing them to the bank to help in repatriation process. The other is generally managing assets in India. It could be not just the financial assets, but also the non-financial assets like property or something. We help the NRIs in managing. We represent them as in case they want to sell or buy something. And we also have a tax advisory for the Indian side. I mean, tax advisory and legal advisory services. So this, apart from that, we actively assist in managing portfolios. That is our main expertise, and the additional ones are what I had mentioned. This is the gist of our services that we offer to non-residents.
You would have like a portfolio managers, and
Yes,
you would choose
yes,
the based on the profile of the person. You could
that's right.
choose the equity, small cap, I mean, individual equities, or it's the
That's right.
mutual.
That's right.
Okay.
We are SEBI
And
registered portfolio managers also.
okay. And what's your fee
What are your
structure?
charges? How much do you charge?
Uh,
Fees?
As of now, we have a 2% per annum. Actually depends from different segments. If it's a debt PMS, it's different. It's an equity PMS, it's different. So we have a slab structure as well as a per annum fee basis. It depends on the kind of strategy they choose. So based on that, we have our fee structure. But it's very competitive actually.
Where are you based out of?
I'm based out of Bangalore, and Mr. Amarnath and the other team are based out of Chennai. That's where our headquarters is.
And you are able to provide this for all regions throughout India from these
Yes,
two
absolutely.
cities.
Yes.
We're able to provide it for, I mean, everywhere in India. The only thing is that there are many cases now, apart from financial investments, like, for instance, property or writing a will or legal assistance. We do all those services for our clients in Chennai and Bangalore at the moment.
Yeah. But as far as trading goes, the stocks and
Yeah,
bonds,
trading
ETFs,
goes
etc.
anywhere
Okay.
in India.
Yeah.
I mean, we have clients from all over India. We have a lot of NRI clients as well.
I mean, thus per managing portfolio, do you reconcile our existing portfolio in India, or do you want to bring in new money to manage the portfolio?
We can review the existing portfolios and maybe suggest changes and take over that portfolio and manage it also. It's not that we only require fresh funds.
Got it. Okay. For the managing portfolio, is there a minimum that you start with? I know Purnima said there are different tiers and slabs.
Actually, the official PMS structure, it is SEBI mandated that the minimum is 50 lakhs. But we do not need to open if the amount is lesser than that. You really don't need to have go under the official PMS structure. We could just register as a normal brokerage account and advise you on changes in your portfolio and be in regular touch about it. So that it will not come under the official PMS where we charge a fee. It'll only be a regular brokerage account and where the normal charges are there when you buy or sell securities.
Okay.
And also, Amar,
Yeah.
since you have your own DP account, right?
Yes, depository. Yes.
If we have DP with a different holding company, we can move it to yours, and you can manage it, right? So that's another option.
Yes, that's an option. We prefer that option. If the brokerage account is with us, we prefer that the depository is also with us because it allows seamless transfer of securities when you buy or sell.
So, I had a question on the address, right? So one of the, when you're opening like a DP account or any account, is the Indian address mandatory?
No.
No, it's not mandatory.
Okay.
You can provide the US address for both the correspondence as well as permanent address.
Okay. And you have like suppose if people don't use your PMS services and they want to do their own trading, do you have like a trading app as a?
Yes, we do.
Okay. So,
So,
but most of your clients are
we are
doing
using it
portfolio.
now.
Sorry?
We have many clients in UAE and in US who are using our online trading system. So
Okay.
they log in during the market hours and then they place their own orders.
But does NRE account also, are they able to do that, Purnima?
That I have to check.
Okay. NRO is not a problem. NRE, we need to check and get back.
Yeah.
So these customers from the Middle East region, right? So are they able to log in during the trading hours and place trades from
Yes.
their geo
Yes,
location?
yes.
Meaning, I mean, so I think you mentioned somewhere you said we are looking at IP and then denying access. So
No,
that same check is not implemented for trading?
We have a system where it tracks the IP address definitely, but for KYC it disallows. For trading, we have seen a couple of clients who have been using the online trading model.
I think once
outside
the
India?
account is, once the account is open, you can trade basically from anywhere.
Okay. So this system, is it the system developed by your team, or is it something that all the brokers use for trading?
Basically, there are providers of this software. It could be either PSC or it could be private providers.
Okay.
So we have also tied up and it is linked so that a person who opens an account with Paterson gets the that software. So it
got
could
it.
be on mobile or on the desktop, laptop.
I was one of the initial software coder for NSE back in the 90s.
Right.
Oh, right.
Okay, wonderful. It's part of the not TCS. Which was the company,
Yes,
sir?
TCS.
TCS.
Back then I was working for TCS, yeah.
So we have to blame you for everything now.
Oh, yeah, sure.
In fact, one of our classmates also was in TCS doing that. I don't know, Prabha Bob. I don't know whether.
Yeah, I worked at this.
She was also there initially, working on this project.
Yeah.
The same person.
So do you guys want to show the contact slide, how to contact you in case people are interested?
We have our email IDs here. Our names at paterson.co.in.
Paterson with the 1 T. Okay.
With a single T.
Okay, we have had 90 minutes, so we had good discussion. Any other last minute questions, guys?
Could share these slide decks, that would be helpful.
Yeah. I will share the slide deck and the recording in probably 2-3 days. So Purnima, send me the PDF of the latest version after I suggested some changes. So after that, the final version, send me the deck.
Sure. I'll send that across to you.
Thank you very much. Appreciate it.
Hari,
Thank you.
for organizing this, and thank you, TT.
Thank you.
It was great interacting with all of you. We'll be in touch.
Yeah. No, thanks. It was a good session, and you answered most questions well. So thank you for that.
Thank you, guys.
so
Thank you very much.
Thank you.
Night.
Bye. Bye.
Bye.